Hello, everyone. Good morning. It's 9:39 p.m. local time here, and depending on whatever time zone you're tuning in from, I wish you a good afternoon and good evening. I'm so excited to welcome you to our first edition of the Forex Morning Mastery for the week, and in fact, I am I am inspired to be here this morning. Just coming up from a weekend where I was feeling a little bit under the weather, and due to that, I wasn't able to share a couple of my insights into my plans for the week, though I was able to share a narrative on what I'm looking at on all of my platform. I hope you all guys saw it, but if you didn't, we are going to be looking at everything all over again this morning, taking into account the fundamental factors and of course the technical details to identify potential trading opportunities. I'm very excited to be here with you guys this morning. Good morning to everyone. Hope you had a wonderful weekend. Before we go in, I also want to welcome newcomers in the house. Good morning to you guys. I'm very excited to have you around with us this morning. The Forex Morning Mastery is an educational avenue where we all come together as a community 3 times in a week. That is Monday, Wednesdays, and Fridays to try and understand the behavioral patterns of market participants through the lens of price action and fundamental analysis. My own name is Sheriff Daramola, and I do encourage us all to actively engage in the comment section. You can ask me any questions as regards to the financial market or the asset we are looking at for this week. All right, guys. So, going into this week, I have three financial assets I'm looking at. I already shared these details with us on my platforms, TradingView and Telegram, and of course on my Twitter and Facebook. We are looking at the US All Spot for this week. We're also going to be looking at the USDJPY and of course my favorite, the XAUUSD. In fact, there's been a lot of development going on behind the scenes, especially around the US dollar, which we are going to be taking into account. Then we should also understand that this week happens to be the last trading week for this month. Is it? Yes, the last trading week for the month. And the last trading week also comes with its own peculiarity, where it is expected that market participants will be rounding off their trading activities ahead of the end of the month and repositioning themselves ahead of the new month. And this usually brings in a lot of volatility into the market. So I have a strong feeling that we are likely going to be seeing strong moves across the assets we are monitoring for this week. Hence, we do want to be very much prepared to capitalize on these opportunities. So, if you are a fan of the USDJPY, the US crude oil, and the XAUUSD, stay tuned in as you do not want to miss out on these valuable ideas we will be deliberating on today. So, with that being said, here we will be diving right into the business. And of course, the first asset we are going to be looking at is the US All Spot. Now, during the last week of, during the second half of last week, we saw the US All Spot gain some traction, about over 100 pips thereabout, giving us a positive size to our portfolio. And since price tested the $68.50 level on Friday, we saw the market go through a consolidation ahead of the weekend. And this further emphasized the prevailing uncertainty in this market, as majority of key players are more or less not wanting to place any aggressive bet, considering the fundamentals in the market right now. The long-term bearish factors in the US crude oil market actually outweigh the bullish ones. But there are few potential positive drivers that could also limit the downside that has taken over this market in the last 2, 3, 4 months. Um, and if we look at it closely, the geopolitical tensions we've been talking about last week appears to be easing, especially around the Ukraine and U.S. official. There was a meeting at Riyadh on Sunday, that was yesterday, and there was a potential progress in peace negotiations with Russia, and this could lead to an increase in Russian oil supply. That is, the Ukrainians have been bombing the Russian oil facilities, and if this peace talk comes to fruition, we are likely going to see increase in global supply from this particular area. And of course, our simple economics tells us that when supply increases, what happens to prices? Prices definitely will fall. Then the Iraq's also has been planning to expand their oil production. In fact, from the recent report, it says that Iraq is aiming to increase its oil production beyond 6 million barrels per day by 2029, with explorations and drilling efforts accelerating at a very high pace. Now, this signals long-term supply growth, actually keeping the downward pressure on prices. But for me, I want to consider this as a long-term thing. That is, if you are looking to trade the US oil for holding a position for like 3, 4, 5, 6 months, we could be looking at a long-term bearish expectation. But at this point in time, things are looking a little bit recovery-ish in a way. I don't know if there is a word like that. As we all talked about last week, we talked about the uncertainties on production cuts by OPEC Plus member. OPEC Plus are planning to cut oil production just to boost demand, boost oil prices. But there has been a little bit of uncertainty amongst investors as they wait for clarity on how this is going to be taking place, how they are going to be reinforcing the discipline around this production cut. Then we also have the Middle East geopolitical tension, which still remains very high. We have the issues with the US striking the Houthis. We have the Israeli striking Hamas, and this has continued, and this could further support oil prices at this point in time. And of course, with the situation we have here, and considering the US China situation as well, what are the chances, or how is our market participant digesting this information? Now, for us to have a clearer reflection of how market participants are digesting this information, we would like to scale up into the 4 hours time frame, which is my first point of contact for the week. I'm not going too far on this one. I'm going to be analyzing how price action had played out or had evolved since the beginning of this month. That's about 3 weeks of historical data. And looking at this closely, you will see that since the new month had begun, prior to the month, we saw price had been dropping significantly, right? But as soon as we got into this month, we saw an interesting stall in this bearish momentum, and this of course resulted into price finding some higher highs and higher lows, giving us a beautiful ascending channel to work with ahead of this new week. As you can see, that's the resistant line of the ascending channel, and of course we have the support line of this ascending channel. And to give a visual illustration of what I'm talking about, you can see how price remain confined within this channel, respecting both the resistance and support line. And if we look at what happened during the second half of last week around the resistance line, you can see buyers appear to be losing that momentum at that point. And for me, I'm beginning to consider that we may likely be seeing price respect that resistance line one more time, resulting into price dropping back into the support line of that ascending channel. And of course, we are talking about 130 pips thereabout, where depending on how price reacts to the support line will determine if we will continue the uptrend or probably join the downtrend scenario if price action breaks down and retest that structure. So it's a simple trading setup we have here on the 4 hours time frame. Now, to help us navigate the structure, I have my key level for this week around the $68 level. As you can see here, this is the $68 area, and this area for me, let me say between the 68 and the $68.50 level, had been a strong selling niche since the month of March began. So we can see that despite the higher highs and higher lows, as soon as price gets into this area, we saw a barrier for the buyers as sellers continue to negate them, pushing price to the downside, as you can see here. So for me, this area here will be considered to be a selling niche, where we shall be looking out for selling ideas below that key level at the $68 area. But if price maintains momentum above the 68, we may likely see an uptrend scenario that could lead to the breakout of the 68.50 and of course the resistant line of that ascending channel. Now, to have a clearer picture of what is going on since this new week has begun, we will need to scale down into our execution time frame, that is the 1 hour time frame, to see what is going on or how market participants are reacting to that price level at the $68 area. Now, to do this, let's scale down into the 1 hour time frame, and right here on the 1 hour time frame we have an interesting trading setup evolving around the structure. Though the week started on a bearish note, as you can see here, we had a resistant line at the $68.36 level. We saw price drop into the $67.86 area, and we saw buy pressure resume from that point. So this is our support line for the week, the first support line for the week. Then we saw price climb back up into that resistant line again, and immediately price tested that. We saw this bearish move back into that key level. Now for us, now the question here is who is going to win this battle? Who is going to win this negotiation? So right now, whenever we have a range bound structure, you know that we understand that there is a prevailing uncertainty during this time frame, that is the last 11 to 12 hours. Buyers and sellers are negotiating. Whosoever will win will reflect on this chart as either a breakout of the resistant line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. However, in my narrative this morning and my update I shared on my platforms this morning, I suggested that we look out for buying ideas at the breakout retest of that $68 area. Now, the reason why I said this was basically because of this buy pressure I noticed here at the $67.86 area. We saw how difficult it was for sellers to break through, and due to this we saw something like this. Price rejects it and then broke above the key level. And of course, when price remains above our key level, it makes a lot of sense we look out for buying ideas. Now, because of this, now we can see prices back into the structure, and I just placed a buy. If you look at my trading panel at the bottom of my screen, I have a buy position currently running on the USOILSPOT, though it's in a loss of about $8 pips, I think. But I still have a strong feeling that we may see price continue the trend, breaking out the resistant line to continue to the upside. So that is how I'm looking at buying the US Oil Spot today. So I already have a buy position running at the moment. Then I will be placing another buy stop order above the resistance line at the $68.36 level. So I will do that right away. So I'm placing a buy stop order above the $68.36 level, and let's see how far this is going to go. So that is basically what I will be looking at as regards to buying the US oil spot. Now, if we want to consider selling the US oil spot, especially if we see any signs of a breakdown in ceasefire talks or renewed supply disruption from Russia or the Middle East, this could actually trigger sharp rebound in oil prices, and of course we want to be ready for volatile moves. And then as regards to the OPEC Plus, we want to also take note of any updates around the OPEC Plus. If OPEC signals deeper cuts or oil could, deeper cuts around oil projection, oil could regain strength as well and climb to the upside. But for me, if I do want to consider selling, I would love this support line to be breached and broken to the downside. So I will only sell the breakdown retest of the $67.86 level. So it's quite a simple setup we have here for this week. A range bound structure already marked out. We're looking for price to either break out the resistance line to further confirm the strength of the buyers, or the breakdown of the support line to confirm the strength of the sellers. So this is basically the structure I will be using to navigate this market, at least for the first half of the week. So I do encourage us all to join me, mark out the structures on your chart, as this is what I will be using to navigate this market today. If you have any questions as regards to what I just talked about, feel free to let me know in the comment section. So as always, I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys, and don't forget to give the video a thumbs up. Thank you very much. See you soon. All right. So in the absence of no questions, I do think that we are all on the same page, and all I have said so far has been quite explanatory. Like I said, we have a simple trading setup where we are open to both bullish and bearish bias, depending on how market participants digest the fundamentals we just discussed. So let's see what happens. I currently maintain a bullish bias since price remains above the key level, and let's see how it goes. If anything new comes up, definitely I will be giving us updates on both my TradingView and Telegram platform. So I wish us all the best of luck on the US oil spot. the next asset we are looking at this morning is the USDJPY. In fact, I already have a buy position running at this moment, and I think they are doing pretty well. Let me see. Okay, so we have two buy positions running at the moment, one with about 9 pips, the other one with 1 pips in profit at the moment. So hopefully price will continue to the upside from here. And the reason why I have placed a buy is as a result of the follow-up on the last last day of last week's trading activity, as we saw the momentum increase significantly from the 148.600 area thanks to weaker Japanese PMI data. We saw last week that the Japan's manufacturing PMI dropped to 48.3, the lowest it has been in the last 1 year. And the service sector also shrank for the first time in 5 months, signaling economic slowdown in the Japanese economic docket. And this for me could be a bearish sign for the yen. Then we also have reports indicating that Trump's reciprocal tariffs will be narrower and less disruptive than expected. Now, this has obviously boosted investors' confidence in the US dollar, now reducing the demand for the Japanese yen, and of course may likely support an uptrend scenario on the USD JPY. And while all of this is in play, the Fed maintains its projection for 2 rate cuts this year, though inflation still remains stubbornly high in the United States, keeping rate cuts timing uncertain at this point in time. Then we also saw the Fed chairman last week reiterated that the Fed is not in a hurry to cut interest rates. Now, for me, this could sound like an hawkish remark in one way, despite the fact that we saw the inflation figures coming lower than expected last week. Analysts and market participants are suggesting that the high tariffs for imports into the US may likely cause inflation in the nearest future. So it's not likely the Fed will be cutting interest rates anytime soon. So the dollar at this moment, though still struggling, still has a room to climb to the upside. Now, in as much as the US dollar is looking promising somewhat, we cannot ignore the hawkish remark from the Bank of Japan as regards to interest rate, as they have suggested that there is a high chance that interest rate will be increased this year following Japan's wage growth, which was strong, and inflation still remains above 2% in the Japanese economic docket. And we also saw the Bank of Japan's governor last week reinforce that monetary tightening will continue if the 2% inflation target remains achievable. Now, this for me also is a supporting factor for the yen in a sense, and I'm talking about a long-term perspective here. Now, looking at the Japan USDJPY since the beginning of this year, obviously the Japanese yen is still the stronger currency, at least for this year, as we saw price had consistently found lower lows and lower highs in the last 3 to 4 months as the US dollar struggles to gain ground. Now, the way things are going for this week, prior to this week actually, we can see that since the beginning of this month, the market has been a little bit choppy, though the momentum we saw buyers trying to recover, favoring the US dollar along the way. Looking at what is going on here, I think that the economic data from the United States and the Japanese economic docket is going to be playing a significant role for market participants this week. As you can see, they are not keen to make any aggressive bet at this point in time. Now, if we look at the economic calendar, considering the two economies, that is the United States and the Japanese economy. We are looking at some very strong events this week. For instance, today, Monday, March 24th, we are looking at the publication from the S&P, that's from the United States. This will be giving us an insight into how well the service and manufacturing sector of this economy are doing. So this is 1:45 p.m. UTC today, and that's about 2:45 p.m. local time. Then we also have the release of the Bank of Japan monetary policy meeting minutes coming up later today. That's about 11:50 p.m. UTC, where market participants will be looking at how the members of the committee, Bank of Japan committee, decided whether they to keep or to keep interest rates at the same level last week. So this will give them a clue of how they are seeing the Japanese economic outlook, and of course it will let them know whether they should hold on to the yen or start dropping it. So this event is coming up 11:50 p.m. UTC. Then tomorrow, there are no high impactful events tomorrow from the United States actually, though we have a bunch of speeches from Fed officials. We have the housing price index and the consumer confidence reports, all of which will be coming in close to the New York session tomorrow. Then on Wednesday, no impactful events except for the durable goods order. Then on Thursday, we have the core PCE. Sorry, we have the US gross domestic products. This is, of course, will let us know how the US economy had performed in the last quarter. And then there is the core PCE, which is considered to be the Fed's preferred inflationary gauge. The Fed's preferred event data to give an insight into what inflation is looking like in the United States. So this one is coming up on Friday. So you can see we have some high impactful events to look out for, and this could lead to a situation where major key players may step aside from the market, waiting for this event to start trickling in before making any aggressive bet, and we may likely see an extended sideways trading activity this week. Now, for me, I started my analysis on the 4 hours time frame, and I didn't go only looked at what has been going on since the month of March, sorry, this month actually. And let's forget about what has been going on prior to this month. We know it has been a long-term bearish move, right? But since this month began, it appears that sellers are losing momentum, and this is quite reflective on the chart. As you can see, we have some series of higher lows here, giving us this beautiful ascending trend line to work with going into the new week. And you know how we use our ascending trend lines, of course. As long as price remains above them, we shall maintain a bullish bias, and the only condition that will make us sell is for this ascending trend line to be broken to the downside, which is yet to happen at this point. Then to help us navigate this uptrend scenario, that is, we want a structure that will make us feel confident if we are buying. So if price remains above that level, we will feel comfortable in our buy position. But if price breaks below the level, then we want to start considering selling. Now, for me, the level that I will be looking at using to be my yardstick for this week is the psychological points at the 149.00 area. Now, in the last 3 weeks, this level at some point had served as a resistant line. You can see sellers were negating buyers' attempt here. We saw the same thing happen the second week of this month, and then not until last week Monday we saw price break above this level, and it served as a support line for the first half of the week before it broke down the structure on Wednesday, as you can see here. And during the second half of the week, we can see that price is back above that key level. So for me, looking out for buying ideas around the structure is looking more reasonable. Now, to help us understand how market participants are anticipating the event for this week, let's scale down into the execution time frame, that is our 1 hour time frame, to see what has been going on. Now, scaling down into the 1 hour time frame, this is what I was able to come up with. The market, though, has started the week on a bullish note. As you can see here, price started the week around the 149.315, climbed up and then found resistance at the 149.950, and since then, that is the last 7 hours, the market has been consolidating. This is, of course, you can see it here. And what did I say earlier? I said that we may likely see a sideways trading activity, maybe for the first half of the week, as major key players step aside, waiting for the outcome of this high impactful event we talked about before making any aggressive bets. So for me, I am going to be watching the 149.00 area very strongly. Price staying above the structure for me will maintain bullish bias. However, if price drops below that key level at the 149.00 area, we look out for selling ideas. So like I said, we are going to be monitoring the CPI data from Japan, the USPCE data, the US GDP, and of course, which other one again for this week? Today, okay, yes, we have the S&P global publication, all of which are going to be playing a significant role in this market. So to simply put, we have a structure to work out with, to use to navigate this market this week. So we have a range bound structure where price through the first 11 to 12 hours of the week, price action is confined within the 149.950 and the 149.315. So within this whole consolidation, I bought, right, and you can see it reflects at the bottom of your screen. You can see it right there. 2 buy position. I actually had 1 position running. I placed a pending order prior to the end of last week's trading session. I forgot to close it and it got triggered during the Asian session today, and then I also placed another buy position this morning. So hopefully the momentum will continue to the upside, and in fact I'm looking at adding more buy position at the break above of this resistant line. So I will place a buy stop order above the structure right away. You will see that at the bottom of your screen. So let me just do that. I will place a buy stop order so that we can maximize the potential of that bullish move if price continues to climb high. If you ask me from my sentimental perspective, I have a strong feeling that the momentum will go higher, taking into account the weaker Japanese data, the resilience in the US dollar following the following reports that indicate that tariffs will be narrower and less disruptive than people had expected. So I'll be leaning to the upside on this one. However, if the market continues to bank on the hawkish outlook from the Bank of Japan, we may likely see a strong move to the downside. And if you are looking at this market from a long-term perspective, you will definitely want to see this sorry, let me zoom out a little bit so we can see things clearly. So if you are looking at this from a long-term perspective, you will definitely want to see price break down this ascending trend line before considering selling. However, I think we have rooms to sell even before the breakdown of that structure happen, and this is where the support line for this week comes into play. So this is where the importance of the support line comes into play. So I will definitely want to see price breakdown, and I'm not going to be jumping into a sell right away as soon as price break down the structure. I would like to wait for confirmations to happen, and confirmation will definitely reflect on the chart as price coming back to retest structure, where continuous selling pressure reveals that buyers are finding it difficult to find support above the 149.315, then trigger a sell position. Then we can have a sell stop order below the 149.00 area to maximize the bearish move. So that is basically how I will be considering selling the USD JPY going into the week. So at the moment, the fact that price remains above the ascending trend line is looking promising. Then one thing I would like to say here, which I forgot to mention, is if it so happens that we see price breakdown retest the support line to trigger a sell position, please note that this is a counter trend move. Price still remains above our ascending trend line. So if price gets close to the 149, that's about 25 to 30 pips in price movement. Kindly move all your stop losses, secure the current sell position while we monitor how price reacts to the 149.00 area. If price goes ahead to break down, then we continue adding more sell position. But if instead we see reversal setups like double bottom structures around this area, it could instigate an uptrend continuation. I will definitely be updating us as soon as price gets into the structure to help us navigate that area. So that is basically what I'm looking at for this week. Simple trading setup we have here. Let's see how the market will play out, and I wish us all the best of luck on the USDJPY. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. You're yet to click on the like button. Okay, we have 2 likes already. For those who clicked on the like button, thank you very much for the support to the community. And for those of you who are yet to click, please try to do so right away so you don't forget to do it. So thank you very much, guys, for the support. So let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in. All right. So I guess we are all on the same page, right? These are the structures I'm using to navigate this market today, and I'm strictly going to be abiding with it. I maintain a bullish bias and looking to add more at the break of that resistance line, and I will only consider selling at the confirmation of the breakdown of the 149.315. So there you have it. Let's see how things plays out. I will continue to monitor price action. If anything new comes in, I will definitely update us on my TradingView and Telegram platform. So best of luck on the USDJPY. So the final asset we are looking at for this week is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, we saw the price of gold hit another record high last week. What level was that? Let me check one more time. Okay, the $3,057 ish. and this strong bullish move can be attributed to the geopolitical risk escalating in the Middle East. Israel has continued its heavy strikes in Gaza, while Iran, backed by the Houthis, continue to launch fresh attacks on Israel and aircraft carrier in the Red Sea, U.S. aircraft carrier in the U.S. In the Red Sea. And of course, in response, the U.S. had also retaliated with airstrikes in Yemen, fueling safe haven demand for gold commodity as everyone starts pushing their capital into the gold assets in case of any because of uncertainty in the market at this point in time. And then the Fed chair last week also warned that tariffs could dampen growth, of course, and he also reinforced expectation that the Fed may ease monetary policy sooner, a scenario that benefit gold as a non-yielding asset. But this does not necessarily mean that gold does not have fundamentals that can cap its uptrend trajectory. We have the U.S., Russia, and Ukraine peace talk, which is going on at the moment. And if this results in pauses in Russian strikes on Ukraine energy facilities, this could decrease gold's appeal as everything settles down. And of course, gold may also face a significant barrier around the $3,000 area. And then one thing I would like to mention here is that we are within uncharted territory. That means that price has never been in this region before. And whenever price action is in such territory, there is always this psychological effect ripple in the market that major participants in the market start taking profit out of fear that price may likely crash from this area. You know, when price gets to an area for the first time, it takes a while before market participants get accustomed or feel comfortable around that price level. Now, because of this anxiety or fear, we may see price of gold drop a little bit due to profit taking activity, which I will not take out of the table. Now, with that said here, we're also going to be keeping an eye on Middle East escalations. That is, if it continues, we may likely see price of gold go higher. But if it eases, then price of gold may also drop. But the bottom line here is that gold remains in a consolidation, as you can see, since price tested an all-time record high. Price has been a little bit choppy, and with geopolitical risk providing support and improved risk sentiment still in play here. And for me, I still have a strong feeling that price of gold will continue to the upside. Now, let us look at how the market is digesting the fundamentals. How are market participants reading this information, and how are they responding in real time to what is going on behind the scenes? Now, to do this, I started my analysis on the 4 hours time frame, and this was what I was able to come up with here on the 4 hours time frame. For those of you who are with me on my Telegram and TradingView platform, you obviously must have seen this. So this is the structure I'm looking at. So what I just did here was to take into account the character of price action in the last 4 weeks, 4-5 weeks, I think. And of course, it is evident that price is bullish, right? We have a couple of ascending trend lines to work with here. This one is right here. As you can see, price is yet to come to test it. You can see, let me give a visual representation here. So we can see this move here. Then we saw this one move again during the second week of March, and price is yet to come back into the structure to continue that one. So as I head into this new week, what I was looking at is, are we going to see a situation where this trend line here will be breached and broken to the downside to test this trend line before it continues the uptrend move? And in fact, we are talking about a minimum of about 5 to 6,000 pips to catch here if that is going to be the case. So that is my first scenario there. And my second one is, will this trend line here hold the bullish momentum just like it did last week? So of course you can see this was a strong selling niche at some point, this trend line here. Buyers were finding it difficult to break through, and then we saw a successful breakout here previous week ago, and then we saw price retest it, and right now price is back into that structure. And of course we can see throughout Friday's trading session, sellers were finding it difficult to break through that area. So will this be a platform that will send price going further higher, or is price going to break down this level to incite a sell-off back into the second trend line? So to help us navigate this structure, I have my key level at that psychological area, that is the $3,000 mark. So this is going to be playing a significant role for me. Price stays above this area, I will maintain a bullish bias, but if price breaks down the structure, I want to be considered selling, though we still have some room to sell even before the breakdown happens, but we shall talk about that when we get to the execution time frame. So I hope we all understand what is going on here. The momentum is still looking very bullish. This trend line here continues to support the uptrend technically, and of course the fundamentals also favors an uptrend scenario, talking about the geopolitical tensions in the Middle East, the US dollar struggling to gain momentum at this juncture in the market, and then it is also subject to whatever the outcome of this high impactful event is going to be like for this week. So let's scale down into the 1 hour time frame, our execution time frame, to see how the market had reacted to this trend line at the beginning of the week. So scaling down into the 1 hour time frame, I already shared this today actually. So scaling down into the 1 hour time frame, this is what I was able to come up with. So we have a trend line. Look at this trend line here. So we have a trend line here, right? So, and look at what happened here this morning. Price has broken out of that trend line, further supporting the idea that we maintain a bullish bias, right? And the fact that price still remains above that ascending trend line we spotted on the higher time frame is making this whole setup promising and supporting an uptrend move. Now, besides that, the market consolidated for about 12 hours, further reflecting the indecision in the market, as we saw price confined within the 3,026-ish and the $3,014 area. As you can see here, this was the exact structure I shared this morning on the XAUUSD. And of course, whenever we have this kind of range bound structure, you know how we do it. We exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So now let's talk about the obvious buyers here, which is an uptrend scenario. So at this point, I have a buy position running already, which is pretty doing very well. We have it running with about 46 pips in profit, as you can see at the bottom of your screen. And I'm looking to add more position at the retest of the structure. So we have price has already broken out of the resistance line to signal that buyers may likely be gaining the advantage as we start the week, right? Now, what I will do is give enough room. Let's see price move a little bit, comes back to retest the structure, and I want to see continued buy pressure to continue the uptrend move. So personally, I already moved my stop losses to break even. So let me just adjust that right away. So I moved my stop loss to break even. So the worst case scenario here will be break even if price happens to drop from this particular area. Now, with that said here, what if price drops below the 3,026? Are we going to panic? Are we going to neglect this bullish perspective No way, we are not doing that. The reason is basically this. Now, price has already broken out of this descending trend line, right? Price has broken out of the descending trend line. And from a theoretical standpoint, whenever price breaks out of a key structure like this, we expect that some point in time price is likely going to come back, retest the structure to continue the uptrend move. And look at how beautifully that structure lines up with that ascending trend line we spotted on the 4 hours time frame. So even if we get taken out of this buy position at break even, price drop to the downside, we definitely going to be monitoring how price reacts to the structure. So we shall look out for double bottom structures or any form of reversal patterns to continue the uptrend move. However, if price drops below the $3,014 level, that's our support line for the week. Look at how beautifully it lines up with both of the trend lines, that is the descending and the ascending trend line. If price can break down these two structures, then we'll start considering selling. But mind you, we are not jumping into a sell right away, as we will need to wait for confirmations to happen before jumping into the sell. Like I did mention earlier, the fundamentals is favoring an uptrend scenario. The sentiment in the market is favoring an uptrend scenario. So even if price breaks down the structure, we'll need some confirmation, as the breakdown could turn out to be a false one. So we want to see price come back, retest structure, continue selling pressure below the ascending trend line, then we can consider selling. Now, if price continues to drop and get close to the $3,000 area, so we're talking about over 1,000 pips, if price does that, we move all stop losses, secure the sell position, and wait to see how the market will react to the $3,000 area. A further breakdown retest definitely will welcome more buying ideas, more selling ideas. But if buy pressure persists above the 3,000, then we want to consider selling. So this is basically what I'm looking at today. It's a simple trading setup, of course. Let's see how the market is going to play out around the structure. Like I said, I have a buy position running currently in about 47 pips in profit. I have moved my stop losses to break even with the hopes that price will continue further to the upside. But if it does turns around to the downside, we'll still have a bust up here to join a buy. But if price breaks it down, retest it, then we will change our bias into a bearish one. So that is basically what I am looking at on the XAUUSD going into the new week. And of course, if anything new comes up, definitely I will be updating us on both my TradingView and Telegram platform. So I think I have done justice to the XAUUSD. Do you have any questions or you need some clarifications whatsoever? Feel free to let me know in the comment sections. I will take about 5 seconds off before we start rounding off on today's Forex Morning Mastery. Stay tuned in. All right. So I guess there are no questions, right? We are all on the same page. All I've said so far has been quite explanatory, and I do hope you marked out the structures as we have illustrated during the course of the session, and they are going to be playing a significant role in helping us navigate the market today. I wish us all the best of luck. As always, we were able to take on all of the 3 assets on our watch list for today, including the USOILSPOT, the USDJPY, and the XAUUSD. Identified simple trading setups to help us navigate the market today. And all I can say is we should exercise patience and allow these structures to mature before jumping into any of these positions. And always remember that every decision we make in the financial market is more or less an educated guess. We only rely on our hedge. Ensure you have a well-defined risk management strategy in place, and let's ensure that it is constant through all of your trades. So it's on this note, I would love to wish us all the best of luck. And I don't forget you newcomers. I hope you were able to gain one or two things with us this morning. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach. I look forward to seeing you guys on Wednesday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well this asset have done so far, and of course prepare ourselves for the second half of the week. So I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.